Hello. Today I will tell you about trading quarters, what you did not know, the most important points that I have learned in the last few months, which work very well, and I would like to share them with you. So, if you don't know what a trading quarter is, then please watch a video about them on my YouTube channel, something like how we use impulse trading, how we pull the grid, and so on, so that you understand what will happen here in general. So, in the following example, we pull the grid from the maximum to the confirmed minimum, precisely according to the confirmed points of oscillation, only according to them. So, we have a minimum here, because it removes the inducement. Then it makes an update, that is, a boss, a rupture of the structure in the proposal of a declining trend, confirming a new high here, a new low here. Why? Because it is here that it removes liquidity in the form of inducement. Here you have a trading range, and according to my video tutorials, you should actually take this high, this low, pull the grid, and understand where your trading quarter is, 4 quarters. Of course, you will be interested in the second quarter and the area after 0.5 comma after the average value. It works great when you have a range that is not quite local, but it is fast in terms of processing. That is, when the price creates a minimum, removing inducement, leaving the zone of some block, immediately making a boss, and there somewhere immediately, confirming a new low. In this case, you can easily measure this range and trade from it. But very often there are situations, for example, on crypto, and also on Forex, when the price forms a very long range, so long, with a very large number of trading and secondary trends. What is a secondary trend? This is a trend that, well, here we see that there is a moving pine, yes, and here we have a secondary trend that is formed within this range, before this low. As soon as the price reaches this low, where the trend ends, by the way, you can also increase it, open some positions. So, here you see a lot of trading, a lot of traded areas, and the price just does not need to return here, I say, from my personal and very huge experience. And as a rule, the price here goes away earlier, so you pull the grid not from this high, but from the last secondary maximum. In fact, it is located here. Well, it can be more pronounced, that is, so that it is higher and more beautiful, but this is not very important. That is, you pull the grid from it, which is responsible for the entire trading range. And specifically here you are already looking for a sale from 0.5 comma, if your goal is specifically to take 0.5. If you want to trade just from the second quarter, then this is not entirely important here, despite the fact that we clarify the second quarter, as well as according to my developments, to the maximum specified area, from which the price always turns. There are times when the price goes higher, that is, to this liquidity pool, which is usually accumulating. In this case, you will not sell here according to the strategy, because the range is now decreasing from maximum to minimum. In fact, you should sell here from some block, but very often it happens that the price just invalidates, squeezes the block, and breaks through higher than 0.2. So usually you have to look for positions in the application, especially if you form a secondary long-term movement. Here's this particular situation, of course. We will consider it in the next video. This will be the topic of my next videos, when the price breaks through the zone of interest, and from which zones it is impossible to trade at all. When the price is formed by such a movement, which approaches your order block, yes, without making a full correction, and the usual classic trend in the form of withdrawing IDM comes to the zone of interest, allegedly breaks, as if withdrawing IDM, but in the end it goes up. After this bite here, you can also track the divergence on the RSI indicator. That is, for example, here your support minimum is in this place. You will track the diver with it, and on the indicator of this LOI here, respectively, it is updated. Yes, this LOI corresponds to this, and this LOI corresponds to this, and here they are updated, here they are not updated. This is the price divergence. This is the most obvious sign that the price will turn around. Here, friends, we have a real example, a real situation. We have Solana T-frame M2. Of course, you can take T-frame higher, but here it is not the essence that is important, not the most important thing. We see a confirmed point of oscillation here, this minimum. Yes, it is confirmed after removing this inducement, and in the future we are not interested in any movements here. We will not consider them now. We are immediately made here by the boss. Yes. Confirming here, you see, a new high, a new high. Now we have to find a new minimum. In fact, I will mark it here, in this place, in the lowest point, because a movement came from here, which turned around. The inducement was removed here. Yes, of course. There was also a LOI here, but I will not take it into account, because the movement from here did not trade 0.5 comma, so we are just ignoring it now. We are not interested in it in any way. So here is our trading range, the short one. This high, then this LOI. In fact, we have to trade inside it and pull the grid, well, purely technically, from this high to this LOI. But this is not quite correct. Not quite tactical in this situation, since, you see what happened here within this range. It was very wide and formed secondary movements. Of course, there is no movement that was there on the example. That is, such straight bright trading. But in any case, here you see, there was a formation of secondary movements and plus the side of sales, the side of purchases, that is, a completely traded area, and there is no need to come back here at all. Nevertheless, here we have this high, which we can take as a secondary, and from it already pull our grid from this high to this. In fact, LOI. Here we will already look further. When the price is taken 0.5 comma after 0.5, we will look for the first technically correct zone, just after the average value here. About the order block there will also be a video, because a lot of new things have been added, a lot of new zones of interest. So there will be videos too. The point is that we are interested in looking for a zone after 0.5 comma, the first technically correct zone according to our strategy. The price takes 0.5 comma, it concerns this order block. We see the formation of the setup here, the price starts to fall down. Of course the LOI does not do it, it will be here. But there is such a type of variation of the setup when we enter the LOI, it is enough to simply remove the inducement here, give us a divergence. In this case, in fact it was not here. Because here you see, this high corresponds to this high to this. It was not here, but there was a hidden divergence with this high. That is, this maximum refers to this maximum, and this maximum refers to this one. On the indicator they are not updated here, here they are updated. For us it was such a good sign for the sale, well, such a DOP factor, and sales before the LOI, before the boss, with the removal of all this liquidity, in general, were very logical, and we will consider such a range traded, despite the fact that if we pull the grid higher to this high, the price did not take 0.5 comma, and purely technically, the first block after 0.5 comma, it will also be higher. And here, you see, the price did not reach it, and you will think, the price did not give a point of departure, but in fact, it gave it here, and very even good. You just have to understand that this plot that remained here, its price is not, at all, not even this plot. In general, this whole area, it does not particularly provide any interest for the price. There were a lot of traded areas here, so it will not grow there. It has liquidity at the bottom. It has a shard movement, a shard trend. So you just take all the plots, calmly trade the movements.